Yeah, I wanted to talk to you about Lilly. They surged about 10% in after-hours trading today. Profit topping estimates. They seem to be going from strength to strength, beating Novo Nordisk.
Yeah, Novo Nordisk announced as well overnight. I mean, their market share in the United States is going to drop in that weight loss drug, and Lilly is going to be the net beneficiary of that. And Lilly has also got an oral, because currently the way they're doing it is via an injectable. They've got an oral coming up as well. So the perception is that Novo Nordisk has really lost that battle for the US patient, and Lilly is picking it up.
Yeah, how competitive is that weight loss obesity market in America?
Oh, well, it's huge. Sorry, no pun intended, but it is huge. I mean, you know, there's a weight problem in the United States. Obviously, that feeds into a whole lot of other things like liver problems, you know, heart problems, type 2 diabetes, etc. So any time you can get a group of people to take a drug that reduces their weight is a good thing.
And I've seen Novo Nordisk have basically talked about how they're under serious pricing pressure as well, and potentially may need to cut prices of their drugs to stay competitive. Yes,
they do have to cut their prices to stay competitive, but Lilly's going to match them on that and stay competitive, so to speak, and that's why they're going to win market share.
Overnight, Google's parent company Alphabet also put out some earnings. On face value, they look like great results, but the shares fell. Is the market misreading Google at all? Or?
No, it goes back to what I said before. You know, it's a once-in-30-year disruption that's taking place, and the speed at which it's taking place is kind of catching people on the fly. The numbers for Google were really spectacular. They announced a larger-than-expected capital expenditure program, I think it was up $40 billion to $170 or $180 billion or thereabouts, and that has rattled investors who they're just uncertain about whether there's going to be enough AI demand at the application, at the customer end, to justify all this capex.
Yeah, well, Amazon, they're going to be releasing soon. Are you expecting another huge capex from them, spend in AI as well over the next 12 months too?
I would think that is highly likely. It's not going to go away, so everyone's going to have to reset their bearings for a higher level of spend. And, you know, it took a while for the internet to really pick up steam. You know, remember waiting 10 minutes for a still picture to get downloaded?
Yeah.
Right? Well, it's going to take a little bit of time for AI to generate a head of steam, but it's definitely coming, and it's actually coming a lot faster than the internet as well.
So why are investors getting worried now about AI and not investing enough money almost?
Well, they're worried that the investment in the compute to do it is ahead of the demand by users to pay for it. It's that simple, right? It's that simple.
Now, Tesla reported about a week ago, but Elon Musk, the chief executive, is making some other moves behind the scenes, merging SpaceX and xAI, private companies. Could they potentially join Tesla? That's now the speculation, that it'll all be merged into one giant conglomerate.
You know, another day, another thought bubble from Elon, right? I don't know what is going on, but the release itself announcing the merger between xAI and Tesla and SpaceX is amusing. If you haven't read it, I urge you.
I haven't looked at it, but
pretty funny.
But the outlook for Tesla, though, is it under pressure with everything else that's going on in the electric vehicle market?
Well, it's vacated the space on two models, the S and the X, point one. And point two, you know, they just don't, whatever else they're saying, they're not ready to field a global humanoid robot in the form of Optimus to actually take the revenue place of the two cars. So it's a bit of a trust me story, actually.
Alex Pollak, Chief Investment Officer at Loftus. Pete, great to have you on the show.
Thanks, Ed. Anytime.